Hello and welcome to the latest episode of Damien's Midweek Markets, the show where I talk about what's been going on in investment markets and what to look out for in the days and weeks ahead. Now, this week saw two competing investing narratives that have been out there collide rather spectacularly, and that was the coronavirus and political risks. And that was because Donald Trump became diagnosed with the coronavirus. Now, if you go back and look at markets last week and their intraday movements, particularly in the US, you would have seen that the US stock market plunged on the news that Donald Trump had contracted the virus. And in the end, the markets rebounded, but they still fell around about 1% on the day after the diagnosis. So it's been the biggest story between last week's episode and this week's episode. How would Donald Trump cope with the virus? Would he be well enough to run the country? And more importantly, would the US election be delayed? And like I mentioned in previous episodes, investment markets do not like uncertainty, and that means the uncertainty of an election taking place. Now, if you go and look at the investment markets this week compared to last week, you will notice that the FTSE 100 is roughly around 5,950. It was at about 5,885. So we saw an initial dip and then we had a bit of a rebound. And similarly, in the S&P 500, we saw the S&P 500 at 3,335. It's now broken above that key 3,400 level, but we did have a sell-off and there was an incredible nervousness around equity markets and a rush to havens. We saw the dollar index increase, and if you recall from previous episodes, a rising dollar has been negative for things like gold, for other commodities, for the S&P 500. And so the rush of the dollar had a negative impact on equity markets. So once the diagnosis was made and actually the physicians said that Donald Trump's condition was actually better than people had feared, then the market started to rebound. The VIX, the fear index on the S&P 500, did spike. It's now still a bit elevated compared to last week. It's around 29. And the VXN, that has remained elevated throughout most of September. So as I mentioned previously, we are not out of the woods yet when it comes to the technology stocks. So what we saw last week is technology stocks bear the brunt of that sell-off. So we're in a position now that the market looks very much like it did at the end of August. We had a rebound from this sell-off in September. And as the month closed out, markets were trying to break towards highs. But we saw a relief rally from the lows of September. But we're starting to see some of that weakness again in technology stocks. We're starting to see the dollar index creeping up slightly. And we're also starting to see the pound weaken, because it's been interesting this week. We had the pound strengthen, so it rallied towards $1.30, and that was on the back of news that the Brexit talks were going apparently well, and we might actually get some form of agreement before the middle of this month, which was the deadline I mentioned last week. That talks need to really conclude so that any agreement can be ratified and can come into law for the new year. But as I make this video now, news has just broken that there's been a lot of disagreement over fishing rights. And now, this was always going to be one of the issues surrounding any agreement regarding Brexit, even if it wasn't the one that was hitting the headlines. So this has come to the fore once again. It looks like it could be a sticking point, and so the pound has dropped. If you remember last week I mentioned, keep an eye on any Brexit headlines. If you see something negative come out regarding the talks, then don't be surprised if the pound starts to fall. Well, we had a bit of both. We had a bit of positive news. The pound rallied towards that $1.30 level that I mentioned. It's a key level. It needs to break through and close above if it's going to keep pushing higher. But it's now pulled back on the news of the dispute regarding fishing rights, and we're now back towards 1.288 for the pound against the dollar. So keep an eye on those headlines in the coming days and weeks ahead. Now, ordinarily, October tends to be a good month for US stocks if you look at history, but the exception to that is when it's an election year like it is this year, and October then tends to be one of the worst months in the calendar. So that doesn't bode well for October 2020. And on top of that, October in an election year tends to be very volatile for technology stocks. So it's another reason that the VXN, that fear index for the Nasdaq, you shouldn't be surprised that that's still elevated. So the message is that things could get a little bit bumpy as we head into the US election, because history suggests they will. And so maybe time to get that tin hat back on. And as I mentioned earlier, there's a definite feel, a similar feel to markets as they are now at the start of October as they were when we were heading into September. And that's not just in terms of stock market moves, but currency moves, with the pound starting to weaken. So in the days and weeks ahead, keep an eye on coronavirus headlines, because investment markets are concerned about the potential for future lockdowns. Of course, Trump's health is going to be a factor in the coming days. Hopefully the president doesn't have a turn for the worse, but if he does, then the rattle we saw in equity markets last week, we could see a repeat of that. But we are heading into that US election, so we're going to expect a lot of volatility in US equity markets, in particular, and by osmosis, global equity markets. Also, keep an eye on potential stimulus measures from central banks and government, in particular the US government. Now, Donald Trump caused a bit of a wobble in markets earlier on today because he tweeted, having come out of hospital, perhaps he not had his phone while he was in there, because as soon as he's come out, he's decided to rattle markets by tweeting that he's going to pull out of any talks regarding stimulus packages until after the election. The market doesn't like that. And today he's done the opposite and seems to be perhaps extending a bit of an olive branch. So markets have started to rebound on the hope of stimulus. And don't forget, markets are hooked on stimulus from governments and central banks. So keep an eye out for headlines surrounding that. And of course, the Brexit negotiations. So that is it for this week on Damien's Midweek Markets. It's a week of volatility and more of the same, to be honest. So if you want to get in touch with me, you can email me. Damien@moneytothemasses.com is the email address. The Twitter is moneytothemasses with the number 2, Instagram, and of course Facebook. And don't forget to subscribe to our YouTube channel.